All right, so since we've gotten to know us a little bit, who we are as a team, talked about some myths in the business and things to be aware of as you go through the process, the next and most important part is the money. So we want to dive into the mortgage process and some things that we want all of our clients to understand as you begin to look at the numbers. At the end of the day, it is most important as a buyer to maintain your best financial behavior as you're beginning the home buying process and especially when you're under contract. So we've created this little guide that we call the 10 Commandments of Buying a Home. These are the things that you don't want to do. And again, your agent will go through these more specifically with you. I'm going to read through some of the most important ones for you to keep in mind. The first is that thou shalt not change jobs, become self-employed, or quit your job. Even if there's an outstanding opportunity that's knocking right at your door, you have to be gainfully employed at the time of closing. So if there is anything that you've changed and it's going to be a couple weeks gap or a new employer is not going to pay you for a few weeks after that, that can adversely impact your closing. By all means, go take that raise, that promotion, and that new job, but you have to stay in touch with us and your lender through the process because it can have some time frame implications. For most people, this comes into play because they're looking at starting other self-employment jobs, gigs, things like that. Understand that if you are self-employed, you're generally going to need 2 years of tax return completed and verified income, meaning not just gross revenue, but what you have paid taxes on to show your lender to get that self-employment income counted. So don't do that while you're shopping for a home, but after you own your home, the world is your oyster. Go start whatever business you want. The rest of these are really just around freezing and slowing down as much of your credit utilization, swiping cards and buying things with credit, or your credit access, so applying for new credit, applying for anything basically that would ask for your social security number is probably going to run your credit, and that could have an adverse impact. At the end of the day, we want everyone to fully understand that our team and the lenders that we work with are here to help you, protect you, and make sure that you're not putting yourself at risk from losing the home of your dreams. So talk with your agent about more of the details on it, but you want to make sure you're on your best financial behavior when you are shopping for a home. The next part in the mortgage process is really understanding some of the language. So when a lender pre-approves you, right? You throw that phrase around pre-approval, it's basically mean you are applying with them for permission to buy money from them. And that buying money is given to different people on different terms. It's all about risk assessment, understanding how risky are you for them to give the money to, and what kind of risk are they taking on by giving you this money that it will be paid back in full and on time. Some of these systems I wouldn't say aren't necessarily fair because they're not explained until you have to go and apply for a mortgage. But the bottom of this slide is something that really want to drive home is that good lenders are really going to help you focus on your comfort and not just your max capacity. You can go online to LendingTree or a million other websites and just put your info in. They can spit out what's called a pre-qualification. That's basically just a rough, high-level look at your numbers based on the money that you say you make, the money that you say you have, the debts that you say you have, and your credit score. Pre-approval is a little bit more in-depth and important, especially when shopping in our area, because it takes a detailed look at what you have coming in, at all of your liabilities, at all of the documentation that lenders need to see later, so that when you do find that dream home and we have to propose terms to a seller, there's no doubt in their mind, in your mind, or in the lender's mind, how long it's going to take to help you actually close and buy that home. So a good lender helps you focus on comfort, not just max capacity. Just because you have that money in your pocket doesn't mean you want to spend it or have to spend it. And we want to make sure you understand what is the comfort number to be targeting. The vocabulary that your lenders are going to go through with you, a mortgage, like I said, that's the instrument that helps you buy the home by buying the money to buy the home. Pre-approval is what I discussed before of the lender confirming how much they're going to charge you to buy that money to buy the home. The term is how long you have to pay back the money that you're borrowing to buy the home. And mortgage insurance. This is a really important topic that a lot of people have questions about. And the best way I want you to think about mortgage insurance is it is another protection element for the bank against the risk that you don't pay them back because they're giving you more money. At the end of the day, mortgage insurance is something most buyers are going to have to contend with if they don't have that 20% down payment. As I said in one of the previous videos, we have plenty of buyers that purchase homes in our area with only 3, 5, or 10% down. You don't have to put down 20%. But if you're not putting down 20%, there will probably be mortgage insurance of some kind, and the lender will help you understand, is that an additional upfront cost, or is that something that will cost you a little bit more monthly? If it helps you get in the door though, it's just a price of doing business, and most of our clients only keep that first mortgage for 4 to 5 years anyway before refinancing into a different instrument or different product. So here are some of the phrases you're going to hear. We wanted to give them to you now so you're not hearing them for the first time when it's loan application time. You got a lot of different loan options that you can dive into as well. And we're not going to get into too much detail about it because this is something that is specific from person to person and specific depending on your pre-approval. But the main loans that most of our clients end up using are either conventional or FHA. Conventional is honestly the stronger in the eyes of the seller and more common in our market, especially in the city. But FHA is also a loan product that a lot of people use as well. It really just depends on how much cash you have to put down, what your credit score is, and what your debt to income ratio is. The lender, when you get pre-approved with them, they help you figure out exactly where all those things are. So you don't have to memorize it now. Just know that you'll probably have to decide between conventional or FHA. If you're a veteran, we thank you for your service, and you're available to get a different kind of product called a VA loan. We do tons of work with VA buyers in our region, especially because of the strong military presence. And there are a few special stipulations with that loan that make it a little bit different than the other two, but for those that qualify, it's an excellent loan product. And we've even had some clients that utilize that VA financing who were able to get more money back from closing than they were responsible for bringing to the table. And they were able to buy a house, take money away, and pay off other debts. Wow, right? Now, thanking them for their service is the least we can do, but just know that there are some special stipulations, and it's important that the agent you work with knows the difference between each loan type and can help you figure out which is the best for you. When you are getting pre-approved, there are really 3 main categories of things that a lender looks at, and we call these the 4 C's of mortgage pre-approval. One of our lenders, Matt Sines, a few years back gave us this slide, and we've just been continuing to grow on it and help people understand what they need to get ready for with pre-approval. So at this point, we want you to understand for that pre-approval that we're asking you to get, what is the bank actually going to be asking to pre-approve you? What documents are you going to need to have ready? The first 3 are things that you provide, and the last one, the appraisal, comes in when you're under contract. But as you look to get pre-approved, the 3 main things that a lender is going to look at for you is first, your character or your credit report. 640 is the minimum score for most of those conventional products, but with compensating factors, we've seen people get approved in the mid 500s. It really just depends on how much debt you have and how much cash you have. The bank is looking at you to determine how risky are you to give this money to. And these are the main factors that they use. So credit, character, cash or capital, again, how much money are you going to have available for your down payment, and then capacity, income, and employment. That's how much can you afford from a monthly perspective. As we look at those first 3, those are all going to be verified by some really important documentation. So with the credit, it's your credit report, right? Remember we talked before about making sure that you're not just giving out your social security number to people because they're going to do those hard credit inquiries. You are going to need to get a hard credit inquiry from your lender. But here's a little secret. So long as you talk to different lenders within a 30-day time frame, the activity of getting your credit pulled for mortgage approval only counts as one hard pull. So I know a lot of folks get really anxious and say, well, I don't want to have all these people pulling my credit because it can have a bad impact. In every other scenario, that is the truth. But in this case, when you're shopping for a mortgage, it's okay to have a couple different lenders do it, just so long as it's within that 30-day time frame, okay? And they want to see something that's into the mid 6s ideally, but there can be compensating factors if that score is a little bit lower. The next thing that proves the cash and capital that you have is bank statements. You need to get really familiar with whoever you bank with, going onto that portal online or in the app and being able to export PDFs of your entire bank statement. The lender is going to want to see everything that went in and out in a month. This helps to establish trends and helps them understand just how much capital you actually have available to purchase your home. There are a couple different things to keep in mind there, like having funds, if they come as a gift from family, be seasoned in your account. Meaning that if you want to buy a house next week, you can't just have Uncle Joe put 5 or 6 grand in your account today, because the bank and lenders are going to need to see a paper trail and where that came from. So if you are someone that is fortunate enough to be getting a gift from family to buy your home, we want to know that in advance, and you want to make sure that the lender is aware so that it can be properly tracked from where it came from to your accounts, and that it's seasoned or in your accounts long enough to actually be used to purchase your home. There are a lot of really smart, really ingenious people that try a lot of different stuff with money. I just want to warn you now, you're probably not smarter than the underwriters at the bank. So there's no way we can really finesse or have surprise money come in. The earlier we know, the earlier the lender knows, the more we can make a plan for it. So just know that they're going to be asking where the money came from and let you see that paper trail. And the last thing that the lender is looking at to verify how much money you make or what your capacity, income, and employment are your pay stubs and your tax returns. Again, for self-employed people, for business owners, we are proud of you if you found ways to avoid the majority of your tax liability. But if you're looking to buy a home, the bank is really going to approve you based on that number that you pay taxes on. So for self-employed people, it's really good that we're starting this conversation early, because there may be a few additional things we need to put in place to make sure the bank fully qualifies all your income. But when you give them those 2 years of tax returns and your most recent pay stubs, that's what helps the bank confirm how much money you have coming in, so they can tell you how much you can afford from a monthly payment perspective. And then that last C for mortgage approval is the appraisal. And we're going to talk about that in a couple slides ahead when we talk about the home buying process. But these are the things that a lender looks at in terms of pre-approval. So get started early so that you can be on your best behavior, your best foot to get qualified for the right number for you. All right, so you've gotten to know us as a team a little bit. We've talked about the process to begin with, the money, where things start, why we do what we do, all the numbers. Now let's talk about the fun part. This is actually getting out to shop for and buy your home. And this is something that we're really good at because we've helped a lot of people do it. So let's talk about getting into the game and the home buying process chart. These are the 20 steps that go into you buying your home. Luckily, we're with you as a team through all of these. I know it can be daunting, I know it can feel like a lot, but it's important to note that you've got a Coalition Properties agent, our staff, and our leadership behind you through every step of the process. And as we look at this flow chart and kind of how it's designed, it's important that it's continuous. When we talked about being the bridge to our community for all things real estate, lifestyle, and wealth building, going around this flow chart a few times is one of the most sure paths to wealth building that we know how to help people with. So it's really important to us that you go from block 1 to block 20 and then actually follow the instructions in block 20 here, which say, pass go, collect your equity, and do it over again. And this isn't about us just trying to sell every house in the region, but we understand that purchasing real estate and owning an asset that can grow with you over time and perform on its own is one of the key ways that people build wealth in this country, and we're really passionate about helping as many people as possible do that. So let's dive into the process. First 3, buyer consultation, which is where you are now. Getting to know us, getting to know you, and as you talk through your individual needs with your coalition agent, that's where the magic really happens, right? It's understanding that overlapping Venn diagram that is capacity and desire. What do you want, right? What are your dreams? How can we understand what those dreams are? And then what's your capacity right now, right? What can you do at this time? Or what can you do in 6 months or a year? How do we make sure we formulate a plan that is specific to you, that helps you accomplish your goals within what you're able to do now and what you can plan to do in the foreseeable future? In this conversation, when you go through it with your agent, we're going to be talking about the buyer agency agreement as well as some broker required disclosures. Before we physically go looking at properties together, we're going to need you to sign that buyer agency agreement with us, which affirms our agency relationship. A couple important things to note about the buyer agency agreement. One is that when you're working with us, it's like dating, it's not like marriage. So if it's not working out, you can cancel us at any time with only 1 day's notice and 0 financial penalty. But in order for us to physically take you into properties, we would need to have a digital signature through DocuSign or Dotloop, which is one of our platforms, of yours and of ours on that buyer agency agreement, which is exclusive. And it does generally have a 3 to 4 month time frame in it. And it just protects our interest as a business and team that if we're touring properties and showing you things, and heaven forbid something happened to you, we have errors and omissions insurance that protects all of us in that case. But we're not saying you have to sign just because of the insurance. We really want to make it clear that we're committing to work with you and for you until you find the home you want. We're not counting days. We're not clicking down a talk saying like there's too many people that are in this process for us and we don't have time for you. But we do want to make sure that if we are investing our time, effort, energy, and skills in you, that we are committed to working together. And also, if you're not ready and willing to commit to us, that kind of shows a sign that you may not be ready or willing to commit to the home that you want to actually purchase to. In a brisk market, we want to inform our clients so they are empowered with the information they need to make decisive choices on the homes that they want. When people get kind of paralyzed by too many choices or being unsure or not committing to who they want to work with, we found that they're not really as successful in this market. So that commitment is on a couple different sides. It can be canceled if it's not working out, but we do have to have that buyer agency agreement in place before we physically go look at something. After you finish your consult with one of our agents, they're going to send you blank copies of this agreement so you have an understanding of that paperwork before it's go time. Cool? Any questions? Just dive in with your agent and we can explain any of the documents that we give you. After we talk about the agency agreement, then we want to make sure that you are fully pre-approved with your lender. In the last few slides, we talked in some detail about what goes into that, but it's really important that you've got all of your pre-approval documents submitted to your lender and they have everything ready for you so that you can also be empowered if the right home comes along to write an offer. If you are not pre-approved, you can't write an offer unless you got all cash. And if you got all cash, then we just need proof of those funds to be able to proceed without using financing. So this is the beginning part of it. This is the most boring. I promise it gets better in the next few slides. After we've talked about approval, after we've talked about agency, then it's really time to dig into more of what you need and want. So one of the important processes that we go through before we go look at stuff is to really review your needs assessment, making sure we understand what your priorities are. What are the things that are negotiable? What are the things that are non-negotiable? How many beds do you need? How many baths do you need? Where will work be? Is work going to be at home for the foreseeable future? Do you just need an extra room? What are your childcare needs? What are your community needs? We want to make sure you're telling us all of these variables and even who else is involved in the process, right? If there's family or parents or cousins or siblings or anyone that is going to be involved either financially or psychologically or emotionally in this purchase process, we'd like to know that up front so that we can include them in all the information that we're sharing with you. We also, before you dive in, want to make sure that you have seen and understand what a sample offer package looks like. Coalition Properties Group is licensed in DC, Maryland, and Virginia. So we can help you anywhere you'd like to buy in the region, but that means that there's different paperwork for every area. Depending on where you like to purchase, we're going to make sure we give you copies of that regional purchase contract early, right after we finish the one-on-one consult with you, to make sure that you've seen those documents, and when it's time to execute them, you have a sense of what's expected and you're not starting from scratch with the paperwork. A phrase I like to throw around that we try to avoid is analysis paralysis. We want to make sure that you don't have so much information at the time of decision and action that you're frozen. So we want to make sure that early, you've got the info, you have every opportunity to have your questions answered about the technical parts so you can be focused on acquiring the home that you like. All right, so after we've talked about needs and wants, we've confirmed budget, now it's time to set up an automatic search for you through the multiple listing service. Now, if I can guess, and you're here talking to us today, you probably already have Redfin or Zillow or one of those third-party consumer apps downloaded on your phone that you look for properties on, and that's completely fine. One recommendation we do have for consumer applications is one called HomeSnap, HOMESNAP. Double check with your agent and they can send you a custom link to it, but that HomeSnap app is a little bit different than Redfin and Zillow because it's actually owned in partnership with our local MLS or multiple listing service, and it has a little bit more accurate data than some of the other apps. Redfin and Zillow are beautiful applications. They put billions of dollars into having a seamless and awesome user experience. However, Redfin and Zillow really don't want you as a customer. When you think about it, at the end of the day, their customer is us, as agents. They have a brilliant interface that gets you to sign in, and after you swipe and see a couple pictures, what happens? Oh, please give me your email address. As soon as you do that, your email and info is sold to the highest bidder locally. So they're really just a funnel that captures your contact info and sells it off to the highest bidder. As a team, we never want to stop you from searching for homes where you have the most information and are most comfortable navigating. But one of the benefits of hiring a Coalition Properties agent to help you is that we as realtors have access to the multiple listing service, which is called Bright MLS locally. This is the proprietary database where other realtors input their listing information and where about 99% of all relevant listing data lives. Now, there are still going to be some other tags on Zillow or other sites that say for sale by owner or make me move or things like that. Don't be shy. You can always share those back with us as your agent, but the majority of your search activity is going to live inside of the local MLS, Bright MLS, where we're going to have an automatic search set up that sends you listings as soon as they come up. And then you're going to tell us when you see a listing that you like, and we will supplement your other searches with what we're looking for in this main database. So we know your budget, we know your needs and wants, we set up the infrastructure to find you the homes, and then it's time to schedule a time to go look at them. So as we go to the next block, slide 6, this is one of the more important and fun parts of the process of starting to look for your home. As you can tell, there've been a bunch of things that we've done before this, or what I'd like to call prerequisites, before we actually go out and look at homes. And this is important because doing the correct legwork and mind work and prep work before you go look for homes is what can best position you for success when you are out shopping. So in our next couple slides, we're going to talk in a little bit more detail about the home search process and what you need to do to be a successful home buyer. Let's talk about our proven strategy for viewing homes. And this might strike a chord with a few of you because it's different from what most consumers want to do, but it's important that our strategy is what is employed by those 300 plus successful people that have shopped for homes, not just people who are window shopping or out looking. We don't want to help people just search. We want to actually help them buy, close, and be successful with their home search process. Anything with a lot of red is a sign. Red is normally meaning that you're not quite doing it right. This is how people do it when left to their own devices, because they assume that the only way I'm going to find a home is by going to look at all of them. Well, even before COVID, that was not really successful because people have so many variables and so many choices that they blend together and they're not focused, so it doesn't actually lend to them having a successful and efficient home search process. When you spend too much time thinking about all the specific stuff in the house as opposed to the specific things with you and your priorities, you're going to be spinning your wheels. So too much red, too much time spent on touring homes, not right. When we talk about doing this the correct way and how successful people actually buy homes, there's a lot more blue. It's just such a pleasant energy than all that red, right? People that do this right spend a lot more time and energy on what we call initial vetting. What does that mean? That means that you're spending time considering what is that actual comfortable max price? What is the location that you need to have, that you want to have? What are the ways you're able to compromise in that location? And then what are some of the suitability features or things in that home that make sense for you? Or what are the things that you can work to add on your own later? The more energy and effort you put into vetting homes first, that's always going to trim the fat. That's going to show you that you don't actually need to go see 25 to 30 homes. With most of our clients, their home search process is efficient as only seeing between 6 to 8 homes with us before you're picking the ones you like. Quite a few do it in only 4 to 5. And that's because we're focusing on 2 to 3 great fits per tour. After you do all that, it shows you that understanding your numbers and your pre-approval is important. It shows you that considering offer terms are really important, and touring the homes is actually the smallest part of the process when people do it right. So successful people buy homes by putting in a little bit more legwork and doing a bit more research before they go out to physically see them. And with COVID protocols not really going anywhere for a while, we're going to make sure that we're safe and we're as efficient as possible in minimizing the in-person exposure and how much you have to physically be in homes unless they are actually winners and check all your boxes. Moving into the next phase of this home search process, this is what happens when you find a home and you like it. For a lot of our clients, they sometimes go through this a few times before actually getting the home that they want because of competition. We've got an interesting market dynamic in the DC metro area where we've got a problem with supply and demand. And that's happening in a lot of places around the country, but what makes it special here is that you've got quite a few well-paid, highly resourced, well-educated folks in our area, and we don't really have a lot of land to build new homes. So when you find a lot of people wanting to live in the city proper or close to one of our multiple city burbs or hubs outside of the city, and not that many new homes being delivered, it's a simple equation of supply and demand, which means the homes that you do have are going to be worth more. So we just want to make sure you understand what it takes to actually write an offer and win a home with the correct offer structure. So after you've identified a home that you like from our tour, that's when the team prepares for you a template called What is Needed to Write an Offer. This is where we break down the purchase contract into the 8 major decision points that go into writing every offer. Your agent is going to go into this directly with you, but each offer is going to be structured different. And we talked earlier about this risk management and weighing risk. Writing offers can be summarized in how much risk are you as a buyer willing to take on versus how much risk is a seller hoping that somebody else will mitigate from them in order to give them confidence in picking them to buy their home, right? It's all about that balance act. If it doesn't make sense for either party, that's fine. But we're going to always tell you, here is the healthy amount of risk you need to be ready to stomach in order to get a seller to pick you. So in step 7, we go through all those 8 major decision points, look at comparables for you, and also present that to you so that you, the buyer, can make a decision. In step 8, this is when we're going to have the lender that pre-approved you before help run some cost-specific estimates for you to show you the 2 most important numbers that go into buying your home. First of those numbers, how much is it going to cost me monthly, right? At the end of the day, what is your mortgage payment going to be? What are you comfortable with? The second most important number is how much is it going to cost you total in cash out of pocket. Always like to say, as Coalition Properties Group, we do not like bait and switch. We do not like bad money surprises. So we want you to be fully aware of the worst case scenario, your total cash exposure and your total cash out of pocket before you actually write the offer and submit it to the seller. And that's why at step 8, it's really important to be working with a local, reputable lender, ideally one of the ones we recommend, so they can give you those numbers and you've got clarity on what your exposure and cash out of pocket situation looks like. After we've come to agreement on terms, you've looked at the lender numbers and you're ready to go, that's when it's time to go to step 9 and actually sign and submit the offer to the seller. Unfortunately, it's not like $1 Million Listing New York where people just sit in the back of Bentleys and talk about offers going from place to place. You do actually have to sign and submit an offer to be considered by the seller. And until your offer is signed by you and submitted, it's not actually an offer. So we got to make sure that it's done and put in writing. The next couple steps talk about what happens after an offer goes in. All right, so in the last step, we talked about submitting your offer. And when we move to block 10, and we're going from right to left here, this is when the seller signs, agrees, and accepts your offer. In our area, we call that contract ratification. It's basically a meeting of the minds, confirming that you and the seller have come to agreement on initial terms that will allow you to buy their home. The first couple blocks have bolded numbers in them. These bolded numbers are times when you're going to need to write a check before you write the big check at the end, which is buying your home. We want you to be crystal clear about how much cash you need to have ready to buy your home through the contract process. So after you've agreed to terms with the seller, the first thing that happens is you have to deposit your earnest money deposit, or EMD, with the title company and review your contract timeline with our team. We have some of the best transaction coordinators in the entire country on our team. And their job is to make sure that anything you're supposed to do in a contract, you know about in advance, you have receipts, you have all your paperwork, all the documents are signed correctly to protect you and make sure that all of the contractual protections awarded are actually enforced and complete. So you don't have to memorize any of this stuff. By working with us, we make sure that you get calendar reminders of every important action step, because it's important for us to know, and we really need you to know so that your action points and decision points are crystal clear. Earnest money deposit goes to the title company. This is generally going to be 1 to 3% of the purchase price. So if you're looking at a $300,000 home, you generally need to have anywhere between $3,000 up to $9,000 to $10,000 ready as your earnest money deposit. And as soon as the seller accepts, this is what goes out of your accounts and into escrow. It's held at the title company. If everything goes right and you end up buying your home, This deposit amount is subtracted from your total cash to close. Remember, we talked about those two most important numbers before. How much is it going to cost you up front? How much is it going to cost you monthly? The earnest money deposit goes toward that. How much is it going to cost you up front? Now, if everything goes right, it goes towards your closing cost and minimizes your cash at the end. If things fall apart in the offer and you breach the terms of your contract, which again, it's our job to make it crystal clear to you when that's a risk or what you have to do to avoid breaching a contract. But let's just say in a worst case scenario, you do. The earnest money deposit, that $3,000 to $10,000 in this case, is the maximum liquidatable damages that a seller can get from you in case of default. Now, in most cases, the deposit is protected by inspection, appraisal, some things we're going to talk about in a minute. But if you just get cold feet at the end, the deposit is your maximum exposure, and the most that can happen to you in the majority of contracts is the loss of that deposit. But again, it's our job, it's our lender's job, it's our inspector's job, it's my team's job to make sure that your deposit is protected and that you're not in a position where you could possibly lose it. The next block after you submit your earnest money deposit is the home inspection. Now, we've got a list of awesome, local, highly professional inspectors that I've even worked with personally on my home purchases. So we've got great people we can recommend. And we work with them for a couple important reasons. One, they have the context from doing hundreds of inspections with us on what's a really big deal, like what's a walkaway issue, and what's something that you just need to understand the cost, negotiate around, or figure out on your own later. Because at the end of the day, it comes down to your comfort with proceeding with the condition of the home with what you can see. The home inspection is something that you're going to pay for at the time that it's done. So the reason why we put that $300 to $700 in bold in this slide is whenever anyone other than me, my team, or our direct staff comes to a home, that's paid for out of the commission that the seller pays us at closing. But if there's a tradesman of any kind that you're hiring, especially somebody for your due diligence like a home inspector, appraiser, contractor, you quite often have to pay them at the time service is rendered. So when a home inspection is done, you got to pay them up front at that time. And if you decide to not purchase the home later, the cost of the home inspection is a sunken cost. So that is some risk that you go down if you're going to go buying a home, is that if you don't buy it and you do an inspection, that is not a refundable charge. However, it is one of the most important things you can do so you can clearly understand the condition of the home. So first couple things after we're under contract: submitting your earnest money deposit, understanding the timeline with our team, getting that home inspection scheduled, completed, and done. There's a little bit more due diligence before it's over, but those are really the first two and most important in the majority of contracts. One special tip: if you're looking at homes that are competitive, where there are multiple offers, our team may advise you on getting a pre-inspection. Make sure you talk with your agent about that, because that isn't applicable in every case, but it is a strategy thing we can use to help you stand out from other offers, doing an inspection before you go into contract. But that's a specific case that we want you to talk through with your agent. The next couple slides talk about the final pieces of due diligence before you close. All right, so the next slide, continuing your due diligence or opportunities you have to get more information about the house. Here are some of the main ones that most buyers go through. So we talked before about submitting your earnest money deposit and completing your home inspection. After the home inspection is done, the next thing that happens is going to be the bank or lender ordering your appraisal. We put in bold under here that $400 to $600 because this is another one of those due diligence, protection, contractor, vendor things that if you decide to back out after an appraisal is completed, that's also a sunken cost. As I said before, if my team or anyone from Coalition is coming to the property to help you out or help you tour it or look at it, there's no charge for that. But when there are third parties or other vendors that come to the home, quite often you have to pay them for their time when they go. So after the inspection's done, you will have been pre-approved earlier by the lender, but the lender is going to need you to fill out your lender disclosures and all their documentation as soon as possible. This brings up an important point that a lot of people sometimes struggle with after we're under contract, is when do I have to pick a lender? We recommend that most folks have their lender already secured and selected at the time we go under contract, because most of the contracts in our region are moving pretty quickly. And if you waste 5 to 7 days shopping or comparing lenders after you're under contract, that's less actual time they have to get the appraisal order, to put you through underwriting, and to protect you and make sure that if you need to be able to back out of the deal, they have that information early. So we're going to advise you to do your due diligence on lenders in advance. Your coalition agent can recommend our preferred lenders that do an amazing job for us and our clients, and have them locked down so that when you are at this step, you're not still shopping and having multiple people do things at the same time. When you meet with the lender and sign the loan documents and disclosures, that triggers the ordering of the appraisal. Now, if we're able to negotiate into the contract what's called an appraisal contingency, this is something that's important and that comes up here. The appraisal contingency is basically a time frame of protection where you ask the seller to allow the lender that's going to give you the money to send a third party to the home and verify that the home is worth what you're willing to pay in the contract. The appraiser that comes to the house cares about two really important factors. What is the physical condition of the home, and does that physical condition, fixtures, finishes, appearance, match up with other homes that have sold nearby recently? The other homes that have been sold nearby recently are something that we call comps or comparables. Comparable sales are generally the same style or type of home within anywhere from a half mile to 2 miles of the home that you're looking to buy that have sold within the last 12 to 18 months at most. Now, appraisers are going to look at those because those are going to be the barometer. Those are what's going to actually set and confirm that the number you've agreed to with the seller is actually the number that the bank will give you. So simple math, let's say you have a home under contract for $300,000. If the last 4 sales nearby were only $250, $225, and one hit $300, there's a slight risk that your appraiser is going to come and say, I don't have enough data to support that this home is actually worth $300. And if you do have the appraisal contingency still in the contract, we're going to have a date on that. So we're going to say, seller, from the date we all agree to these terms, we need 14 days or 18 days or 21 days to make sure that the value and number we agreed to is actually supported by the physical condition of the home and comparable sales nearby. If in this scenario, the lender comes back and the appraiser comes back and says, you know what, I know you agreed to 300, but this home is only worth 290,000. The appraisal contingency allows you, the buyer, the option to go back to the seller and say, hey, Mr. Seller, Mrs. Seller, I know we agreed on 300, but the bank is only going to give me 290. Would you consider lowering your price to match the appraised value? When you have that appraisal contingency, it basically leaves room for you to ask the question. It does not require or force the seller to reduce their price. So even though you have the right to negotiate, in that case, the seller could say, you know what, I think the house is actually worth more than 300, so I'm not going to reduce my price. If you can't come to an agreement with them, that earnest money deposit that we talked about before would be refunded back to you, so long as this all happens within that time frame. Your agent is going to talk through more of the details of this with you, but we want it to be clear that when you have an appraisal contingency in your contract, it's another layer, another level of protection that ensures you're not overpaying for the home. So financial protections, important stuff. Really good that our lenders know how this works, that they explain it to you. We wanted to give you an overview of how it works here. So 13, appraisal, its own thing. The next block, after the appraisal is completed, this is when your loan goes to underwriting. We always warn our clients that the underwriting process is annoying. It feels invasive. They're going to be asking for redundant stuff. You will have already given them all your information when you were pre-approved, but it is the underwriter's job to look at that with a fine-tooth comb and ask questions. What we need from you during this underwriting process is to stay in touch with the lenders, give them what they ask for as soon as they ask for it and as complete as possible. Some things you can do to prepare for this in advance are make sure you have all of your bank statements downloaded online. Make sure you have all of those pay stubs, tax returns, all your financial documents in one place ready to go, because they're probably going to ask for copies of them or explanations on things that come in. And we always want to prepare our clients for responding to the lenders as quick as possible so that you can get your loan approved and stay protected. After the lender has gone through underwriting, after the appraisal has been done, we move to block number 15, is when the underwriter issues what's called a conditional approval. That means that they pre-approved you before, they've looked at everything through underwriting and said everything is pretty much the same as we asked, the home is worth what we think it's worth, they're ready to go to closing. Before you go to closing though, there are a couple more important steps that you have to review. If you're purchasing a condominium or a home that's in a homeowners association, you get a whole nother set of protections called the document review period. Now, this is a little different depending on if it's in Maryland, Virginia, or Washington, D.C. So maybe make sure you check with your agent on exactly what your timeline is. But in pretty much all of those jurisdictions, if you're buying in a neighborhood that has specific rules, you're going to get the right to review those rules before you have to buy the home and with the opportunity to back out. So I always joke and say, if one of our clients is a Prince fan and they want a purple door on their house, if the rules to your neighborhood prevent you from painting your door purple, that's something that we're going to know at this point of the contract. So after you're under contract, but still within a window that you can make the decision to proceed or not based on what they say you can do. So HOA review, condo doc review is another time period of protection. And really the choice is yours. That is what we call a unilateral opportunity for you to proceed or not based on what's going on in those rules. You can also talk with the property manager and get clarity and get answers to any specific questions you have about renovations in the unit or about exterior or about grills or about parking or anything that has to do with that neighborhood. We're going to make sure you get the opportunity to get your questions answered. At step 15, that's when the lender puts everything together. They put you through underwriting. They've given that final approval. Step 16 is an important one because it does require action on your part. It's called reviewing the closing disclosure. So after you've gone through the inspection, everything's good with the house, the bank confirmed that it's worth what we think it's worth, the bank confirmed that nothing has changed about your credit profile or income or anything you've provided, they approve your loan and they have to give you a final ledger that shows how much money the sellers get and how much money you owe at closing, and that's called a closing disclosure. Legally, you have to review that document a minimum of 3 days before closing. And we're here to help you overlook that document as well. But our lenders, when you work with one of our preferred, are so good, there's never a bait and switch or surprise with these final numbers relative to the earlier numbers around step 8 that showed you how much is it going to cost you in cash and how much is it going to cost you monthly out of pocket. So these are some of the final loan steps. Everybody's process is different. These generally happen within that 14 to 20 days after closing. But if the timelines need to be adjusted, this is something you know in advance, you're never surprised about. We just wanted to make sure you understood it a little bit before you got too deep into your contract process. Now we're talking about the final steps, which are closing and buying your home. All right, so now that we've gotten through your due diligence, your loan's approved, you're ready to proceed to closing, there are a couple important steps to make sure that your closing day is successful. The first, step 17, is making sure that you secure certified funds for closing. We've had some instances in the past, before we had such a robust guide explaining things, where our clients brought personal checks to buy a house. And while we trust you and like you and want to work with you, the bank doesn't and the title company doesn't. So when you're buying a home, you have to either send a wire, which is certified funds, or bring a bank check or money order, certified funds at the time of closing. And this is something that our transaction coordinator is going to make sure you're aware of in advance, and your lender is going to make sure you're aware of in advance. But I'm also telling you now, you're going to have to bring certified funds, and this is that how much money is needed out of pocket at closing. And that has to be done, generally set up a day or so before, so that it's not the day of and you're scrambling to get the money. Step 18 is settlement, closing time. That's the actual time when you sign documents, money changes hands, and you take legal possession of the home. This generally happens on weekdays, so it does have to happen between 8 a.m. and 5 p.m. Monday to Friday, because it has to happen when banks are open, right? When the money changes hands and documents are signed, that's when settlement is actually complete. And again, that's the big dollar sign because that's when the rest of your funds outside of your earnest money deposit are due. But this is an exciting time too, because that's when you get to own your home. That's when you get to actually complete the process, and that's the most exciting part. And we'll always tell our team and our clients that we're happy to be there for those exciting moments, but we're also wanting to be and hoping to earn our right to be in relationship with you for everything else in the house too. The last couple steps after closing, which are important and kind of go towards closing this circle that we talked about, are that you call us back in 3 to 5 years. It's our goal that we're helping our clients position themselves to leverage their property for whatever else they want to do in the future. So when you're working with Coalition Properties, it is hopeful that this is not the only transaction that you complete with us. And that's not, again, for us making commission or making more money, but it's about our mission, right? Being the bridge to our community for all things real estate, lifestyle, and wealth building. Real estate can be a conduit to wealth building. Wealth building can be a conduit to a whole different lifestyle, and that lifestyle can have generational impacts, and we're super passionate about that. So we want to make sure that you're in position to call us back and see what you can do with the house, with buying another house, with buying investment property, with doing a syndication with us in 3 to 5 years. And in step 20, if you're in an equity position, we want to talk about what it will take to collect that equity and move on to buying another house. Like DJ Khaled said, another one. So we want to go back to the overall process and show you that this is the general chronology that it takes. When you go through this with your agent, they'll talk about if there are any specific programs you're using, how that's going to change the timeline. If there's any specific type of home you're looking to buy, like new construction, how it's a little bit different. But generally speaking, these are the steps that everybody goes through. And I do just want to point out that for most people, from contract, which is step 10, to closing, which is step 18, so the majority of that due diligence time frame is about 20 to 45 days. COVID hasn't really changed that. If you're looking at new construction, the timeline can be longer. If you're looking at some specific loan products like HPAP, NACA, EHAP, Maryland Mortgage Program, VHCD, a lot of those are going to take a little bit longer as well. So the process is the same, just the timeline switches around a little bit. And when you work with your specific Coalition Properties agent, they're going to make sure we get a specific plan and you have a clear understanding of how long it will take for you. Hope this was helpful. And before we wrap up, there's a couple important things we want to talk about that happen after you work with the Coalition Properties agent. All right, so we've just completed the home buying process chart, our real life game of Monopoly, helping you get all the pieces, collecting equity, not pass and go, and doing it over and over again. What's really important and what we need and what we want to earn is the right to be referred by you to your friends and family. We like to operate on a promise. It's a promise that we're going to give you stellar service, we're going to help you accomplish your goals, and all we ask in exchange is that you keep us in mind when anybody in your world is looking to buy, sell, or invest anywhere. Our team, with helping close to 450 people in the DC metro area just in the last 2 years alone, has a pretty huge footprint. So if there's anyone that you know that's looking to buy, sell, or invest, we may have someone in our circle already that wants to work with them and help. But also, if they want to do it around the country, because of the network we're a part of with Keller Williams Capital Properties, we've got great agents everywhere. So it's our hope that we give you such a great experience that you feel welcomed and included and wanted in this community to the point where you want other people to be in that community too. So it's our hope to earn the right to be referred by you forever and to be your realtor for life. We're also rolling out a VIP program, which is creating custom experiences and additional incentives for folks that we work with through multiple transactions and that send us multiple referrals. So make sure you talk with your agent about our Coalition VIP program. Another important part of our culture is the housewarming party. Now, it's changed a little bit with COVID, just because, inside, breathing, germs, all that stuff. But just know that getting together and celebrating you and celebrating our successes and each other in our communities is really important. So if you're looking to have any type of hybrid or celebratory event around your home, let your agent know. We want to participate, at least with providing libations and maybe even bringing me back out of retirement. I used to have a DJ business. We got some pretty good sound systems. So ask about participating in your housewarming party because it's something that we love to do. Our partner Ryan is quite the epic dancer. And Keith knows all the best restaurants, food, and caterers in the region. So make sure you let us know about your housewarming party and how we can participate in that with you. Thank you so much for joining us again for this homebuyer consultation and learning about the process and what it means to work with Coalition Properties Group. I wanted to point out a couple more things about us and about some of the relationships we have that are our unique value proposition and help us be so successful in the market. The first is our connections. I'd like to think of real estate agents at their highest level and what we've been able to achieve with Coalition as being coaches, right? We put teams together of people that help our clients succeed. That's really one of the most powerful things that we have as a unit and as a team. People are always asking for who's the best contractor you have, who's the best lender, title, inspector, insurance. We've got great folks that we work with, and I want to be clear that no one is on that list just because they paid to get there. Our relationships are based on experience, they're based on trust, and they're based on us being willing to put our name next to them. So make sure that when you're working with your Coalition Properties agent, you're asking them first for referrals in any category you need. Because through leadership's experience, through our whole team's experience over the last few years together, and over my almost 11 years in the business as one of the leaders of the team, we've got somebody in every category. Who you work with matters, and who they work with matters. So make sure you keep that in mind as you go through this process with us. We got everybody you need in every category. All right, so you're here talking with the Coalition Properties agent. We want to give you a little bit more social proof and reasons why we're pretty legit other than the referral or whatever brought us to have this conversation today. We've got a lot of awards in the region and in the area. So our leadership has basically all won internal brokerage awards with Keller Williams Capital Properties, the DC Maryland and Virginia franchise of Keller Williams Realty International, where Coalition Properties is based. We've also been repeat GCAR, Greater Capital Area Association of Realtors Awards winners. We've also won regional awards for the DC and Maryland region for Keller Williams. DC Metro Real Producers has done multiple features on us. And a couple different publications nationally have acknowledged us as outstanding African American real estate professionals. One being Shop Black, which lists the top 25 real estate professionals in the country. We've made that list actually a couple times. Additionally, I was honored as one of our team leaders in NAR's 30 Under 30 list that comes out every year, and that's the top 30 real estate professionals under the age of 30. That was something I was able to earn in 2016. On Yelp, we're consistently in the top 10, which is one of our favorite metrics. WKYS, local radio station, has named me one of their 30 Under 30 honorees in the past. And DC Open Doors, which is one of the local loan programs that's run through DC, named us as one of their realtor champions in the past, showing our commitment to working with programs. Property Spark is another social media outlet that named us one of the top real estate professionals to follow. And then Washingtonian Magazine. We've actually had 5 times being included in their best agent and top agent list. So those are both external, where other consumers have picked us as good agents, and internal within the industry. All this stuff matters just because it shows that we've got other folks in our world that trust our name, trust what we do, and that can be used to your advantage. On top of some of the awards, I, Harrison Beecher, one of the team leaders, am doing a lot with our local Realtor Association and our National Realtor Association. And this matters because our name does have some respect that comes with it. Like Baby said, put some respect on our name. Coalition Properties already has some of that respect that comes along with it. I'm fortunate to be serving as president-elect for the Greater Capital Area Association of Realtors, and I'll be president of that 11,000 member local real estate association in 2022. And why does that matter to you as a client? It basically just means that when our name comes along on top of one of the contracts that's working with you, people recognize it, they know it. And all things being equal, that trust and positive brand recognition in this marketplace is an actual currency that we use for your benefit. So agents should be connected, agents should be plugged in, agents should be active in the community. That's the only way they're able to complete as many deals as we do and give our clients a competitive advantage over being known and well respected in the industry. I want to talk with you for a second about reviews. If you're here with us today, hopefully you've seen that we have a pretty good presence online. If you haven't, please go check us out on Yelp. The profile would be under my name, Harrison Beecher, Coalition Properties, and that's only a small factor of the number of views we have online. I know Keith, my partner, has quite a few there. Isaiah, Ryan, some of our core team members have that. But make sure you're looking online for more social proof. And if you ever want to connect with some of our past clients, we're happy to make intros because we build a community of folks that have good experiences and are happy to share those. So check out reviews online. They're really important, and we've got some pretty good ones. I also want to wrap this up with talking about the norms and expectations. Really clear what you get from us and what we need from you for this to be successful. So your agent will go through more of this specifically with you, but I want to give you kind of at a high level what you get when you work with us. The first, when you as a client hire us to represent you to buy your home, is that someone from the team is going to respond to you. If that's ever not happening, you're going to have leadership's contact information directly. Please reach out to us and let us know. This market moves at the speed of business, and that means that when you want something, we never want the reason for you not getting a home or missing out on an opportunity to be that we didn't respond. That's not how we work. That's not one of our core business principles. So just know that speed of response is really important, just so we can get you the information you need to make a decision. We're always going to be honest with you. Our team would not have grown to where it is or built the referral business we've built without being anchored in honesty, transparency, and hopefully earning your trust. We want to work with you and your community for more than just one transaction. So through that lens, why would we be pushing you to something that's either unsustainable, not good for you, or put you in a bad situation? If we think something is a bad deal or doesn't make sense for you, we'll tell you that. And if you ever have any concerns about honesty or transparency, again, that's something you come right back to leadership with, but that's a core tenet and core principle for our team. The next thing we want you to know in terms of an expectation of what you get from us is that we will protect and respect your confidential information. There's a lot of sensitive details that you're going to be sharing with the lenders and that we will understand or at least talk about verbally. Something to keep in mind is that we never, as a team, need your banking information, your private information. We're never going to ask you to send a wire or money to us. So if you ever get communication by email or something that feels like it's asking a question you're not sure of, always pick up the phone, always call your direct agent or call leadership. The lenders who pre-approve you are going to have secure and unique portals for submitting your personal confidential information. So unless you're giving that information to your lender or to the title company at the end, nobody on our team should be asking for it. And if they are, always double check that with a second step verification of calling or texting us to make sure that it's right. But we take your information protection as a top priority, and we're always going to protect and respect your confidential information. The next piece to keep in mind is that we're never going to compromise your negotiating position. When you hire us, that's called a fiduciary relationship. Executing the buyer agency agreement requires that us as realtors, who are bound by the Code of Ethics and members of the National Association of Realtors, have to look out for your best financial interest over our own. So if there is an opportunity that we could make more money, but it could possibly harm you or be a detriment to you, that's something that we'd have to disclose or talk with you about in advance. We're not going to come to this from trying to collect more information to use against you. It's us on one team against the other side. And if you ever have questions or concerns about that, again, that's a conversation directly with your agent or directly with team leadership, because we want to be on the same team working together to get you the house that you want. We're always going to respect and be considerate of your time. We really appreciate you taking a little bit of time to look at this information in advance so that we can be as efficient as possible when we actually meet and complete your full consultation. But just know that it's our goal to always respect and be considerate of your time as a consumer, because time is money. We promise to tell you what you need to hear and maybe not what you want to hear. This goes back to that honesty factor from earlier, whereas it doesn't help anybody if we're mismanaging expectations, or that if there isn't crystal clarity about what's expected, who does it, and when it happens. So just know that working with Coalition Properties means that you're going to get the honest answer all the time, even if it's not the answer you want to hear. And then at the end of it, what we need from you is to work with us, be on the team, sign that buyer agency, take our advice, be collaborative, be open-minded, be listening to us so that we can reciprocate that, right? That it can be a working relationship in the highest way possible. And for us, that means we're going to give you a top-notch experience and build a relationship for life. Now let's talk about a few of the things that we need from you in order to make this work. Look at that, there's only 4, a lot less that we need from you than you get from us. The first is that we require that you speak with at least one of our preferred lenders before we go out and look at homes. And this is important because the lenders that we've built relationships with, we know can perform in the market. Anybody can show you a quicker or lower quote online. It's kind of like shopping for car insurance or any other service, right? With a quick answer, without all the context and information, anybody can tell you that it'll be cheaper. The question is, how does that person perform in the market? And what competitive advantage does that specific lender, loan officer, bank actually give you in the eyes of the seller? So by you checking with at least one of our preferred lenders, that does one of 2 things. It shows you that the numbers you're getting from somebody else are actually the best. And hopefully the reputation and execution of that other bank is good as well. It also may show you that our bank and our lenders can give you a better rate and give you a better option. So by comparing with at least one of our preferred lenders, it either validates that who you've got is legit or shows you that who we're working with and who we recommend can do better for you. So everybody wins. We ask that you give a minimum of 24 hours before we go see properties. And this is important just because beyond COVID and making sure we have confirmed appointments, we want to make sure that we can collect the proper information so that when we show you the home, we know what you need to do next. Because there's nothing worse than rushing to see a home, loving it, and not having an answer on what the next steps are. So having that 24 hours lead time is really important and really crucial for us to give you the best service possible. We ask you, as a final step, to let us know if there are any changes to your search, timeline, or situation. This is important because we're going to be doing this, right? I've been in the business now going on 11 years. Our team's been up and functioning for 3 years. But it is our intention to build an organization that will be here for a while. So if you're not ready to complete this process right now, if you get started, things change, let us know. We never want to be ones that are bugging you or pushing you to something you're either not able to do or don't want to do anymore. So let's be on the same team. Just be honest with us. And the last thing that we ask of you is that you execute that buyer agency agreement before we officially go look at properties. As I talked about in one of the other slides through the actual flow chart, executing the buyer agency agreement and officially hiring us is a commitment. It doesn't bind you to pay us because the seller pays us at closing, but it does confirm that we have that agency relationship in place and that we're both committed to working towards your goal of home ownership. If it's not working, you're not bound to work with us forever. But that initial commitment is important so that we know the time, effort, energy, and thought that we're putting into working with you is reciprocated on your side by being focused to and committed to the process. If you got any questions about these steps, these norms, expectations, or commitments, make sure you reach out to your coalition agent or to one of the leadership members directly. Thanks for your time. Thank you so much for taking the time to go through this virtual homebuyer consult, and we look forward to continuing the conversation with you. And I want to just confirm the next steps for us to get going. So the first would be just to confirm all the details of your search with your Coalition Properties Group agent. Again, if you've already had a consult and conversation and this is refreshing it, let's just recap that with your agent. If you have yet to have the specific conversation, let's make sure we get that on the calendar and understand what we need to do to best help you next. We also need you to confirm that budget, qualification, and pre-approval with your lender so that we know that comfortable price point and we can start sending you listings and talk about specific homes. We then need you to execute that buyer agency agreement before we go physically look at homes. And then at the end, we go look at homes together, find one, get it under contract, and help you accomplish your goal of home ownership. If you got any questions, reach out to your agent directly or reach out to leadership. We're always here to help.
All right.
Thank you.